If you get one or a little bit more, and boom. And you got to be able to identify when you are in that market because your strategy has to change. You get lack of follow through. Now, let's define lack of follow through. All right, I'm going to define it. Lack of follow through is this: boom and boom. That's it. That's your lack of follow through. And boom, 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 or something like that. So the lack of follow through, if I had to give it a name, if I had to define it, it's a two push market, including your initial event. Now think about this. A two push market, not after you get in, a two push market, including your initial event. So in a way, it depends on how you look at it. If you include this as your initial entry, then it's a one push market. If you include all pushes, including your buy event, it's a two push market. All I'm saying is that this happens a lot more frequently in August than any other month. All right? Two push, and we'll look at some examples of that, right? Some of you are pointing them out. Now, let's go over the different types of two pushes. All right? So you get the two push like this. You get the two push like this. So remember, a push sometimes can be multiple little bars joined together to create your second push. All right? Please understand that. It's not don't get into the trap of defining a push as a bar. It's not, because multiple little bars can make up a push. Okay? So that's another version of it. Another version is PayPal, what we're looking at here. You know, you can get a one bar move that's so big that you consider it two, and then it falls apart. So you've got that one. So think about this. Anything that's really big has greater odds of just petering out, because that big thing is really more like two pushes. And remember what I explained earlier, the second and third tier traders just don't have the authority to continue a commitment like that. And so seasoned market players that have been through many Augusts and know this, they become more, I guess you'd say, scalpers, if you will. They just become more short-term profit takers, which actually exasperates the whole thing, right? They're not looking for extended moves. Now, there can be these days, like we've had days in August where it's a forever trending day. Of course, that's possible. We're talking about what happens most opens, especially. All right? Okay. So don't forget, it's kind of these three. Maybe there's a fourth one if I've forgotten, but there's these three main types of two pushes. And that's what makes it difficult. So if you get into this play, here, or some of you even here, and this is what you're going to experience in August with high frequency, this is why it's tough. All right? Now, a few of you, has this been your experience? Have you been experiencing this, where you get into it's good play, it's good position. You get maybe a little bit, and then boom, you get slammed or reversed. Has this been your experience? I'm curious. All right. Yes, a lot. Yes. Okay. Okay. So let's go over some of the examples just from today. All right. We can take the index, which will show you what the majority of things are experiencing here. So here you have a very decent igniting bar off of 200. The 200 is not all that flat, so that's something to be aware of. But anyway, here is this whole thing. You can probably define as kind of like two pushes. All right. And this is crazy because, like, you get into this bar and you got this little amount and then you're slammed. And now you're even reversing big this way because there's no commitment in the market. There's no continuation of things very often. All right. Can I elaborate on push being not a bar? Well, let me get to an example and see if I can show you one. All right. I'll show you one and it'll clear it up. Okay. So that's one. And then we have, let's look at C today. And boom. Okay. So you're getting these pop, pop, and that's it. Pop, pop, and that's it. That's the scenario. Starbucks, we were just looking at. I mean, Starbucks, I think, was mentioned. Pop, pop, and that's it. And that's what makes the market difficult. All right. Pop, pop, and you're done. All right. Someone's saying XOM. Well, yeah, you get this nice play, and it doesn't go anywhere. All right, and then we've got a few. I think the banks were largely like that. We saw C, right? Pop pop JPM. Pop pop, and you're done. Some of you are saying MS. Same thing. There's Square, I think. So not this a great play, but just so you get the first event and then one little left and then boom, you're out. Now, of course, there's always going to be outliers. So it becomes a very, very strict market, stock pickers market. Even these are in the trap zone, but still you see the effect. Green, green, and you're done. And so eBay is one where, so this is someone was saying they wanted to, let's fix it, wanted me to cover what's a push. Can I elaborate on a push that's not a bar? This is a push that's not a bar. So just think of this vertical, right? So that's all I'm saying. Your push can be this, or your second push can be that. It can be one bar, or it can be a drift made up of multiple bars that give you kind of like the same effect. All right. Let's fix it. Do you see this? It's more of a little tippy toe step upward that gets a push like distance. All right. Each individual bar is not enough to be a push, but when you string them together, you got a second push there. Okay. And you don't get much more after that, and you're done. All right. Yeah. Shin is saying, but with the banks, you got nice moves to the downside. Yes, but we're not talking about that. We're talking about if you were long, right? If you were long this, and normally that's a nice long right there, right? You've got one push. Now, could you stop in reverse? Could you get out of this in reverse? Yes. But that's a different topic. I want you to be aware of what you're going to see in August like market environments. Now, remember I told you that I think this is important to understand because you have to be able to determine even throughout the year when the market goes into an August like environment. It can happen during pockets throughout the year as well, where you realize I'm not getting more than one push after I'm statistically not getting more than one push or much more than one push after the initial event. And that's what you need to keep your finger on the pulse of. Here's the event, one. If you get one or a little bit more, and boom. And you got to be able to identify when you are in that market because your strategy has to change. So you have to be a quicker profit taker, right? So you lighten up, boom, you lighten up on a one push, go to break even, and at least you grab some change. So think about this. You get in two, stop, you take one out, you go to break even, and at least you grabbed profits if you don't lose on the one you have left and you truly stop out at break even, you have some small change of profitability in the play. Tell me you understand that. When you're in these markets, you might have to go to one push profit take, and that's for purposes of training, that's what I call a scalper's market. A scalper's market is a one push market. All right. The other thing you can do is what Derek was saying is drop your size. All right. Now, if you're going to do this, if you're going to do a one lot strategy where you can't split the lot, right? If you're going to do a one lot strategy, then you should not be a one lot profit taker. It changes. So if you're a one lot, stop. Once you get the first, you go to break even. But you don't take the profit with a one lot. You split the baby if you have a two lot and you stop out on one. So if you only have the one, you must leave it to stop out. If you have two, you can take one out and leave the one to stop out. So you should always have one to stop out. That's the point. Now, the reason for this is that statistically, with this one lot stop out at break even, if you get the one push, boom, one push here, you raise the stop out, is this gets you a lot of no loss, no win plays. No loss, no win. No loss, no win. No loss, no win. But when the win happens, boom, you're over the top. Do you understand? So you don't want to cap the ones that go. You want to neutralize the ones that don't, but don't cap the ones that go. All right, so it'll be a mistake if you are a one lotter and you just take a one lotter and you just take. That's, in a way, that's kind of dangerous, because it will turn you into a scalper only trader, and then you're pretty much doomed from that point onward. You'll never be able to get 2 and 3 lots again. It gets into your blood. It gets into your trader DNA. It's not cool. So one lot is only no profit take after the first push. It's break even after the first push. 2 lots, you can split the baby. 1 profit take, 1 stop out at break even.